Buenos días a todos. Por favor, vamos a ir... La gente se va a ir uniendo porque la plenaria terminó un poquito más tarde, así que, pero si no se nos va a retrasar todo. Muy bien. Bienvenidos a todos. Voy a hablar en español, pero hay traducción simultánea y cualquier cosa podemos tomar las preguntas también en inglés. Bienvenidos a la Mesa Redonda 3, impulsando el cambio global, el papel de los bancos de desarrollo para movilizar capital privado para una infraestructura sostenible. Vamos a empezar esta sesión con dos ponencias muy interesantes que son relevantes para el debate que vamos a tener hoy en la Mesa Redonda. Agradecemos a Gonzalo Martínez Torres del Banco Mundial por traernos esta presentación clave de un estudio reciente sobre la participación de los inversores institucionales en el desarrollo de infraestructura sostenible, y a Joan Prats, nuestro especialista principal de mercados financieros del BID, por su presentación sobre el próximo estudio que estamos realizando en el BID sobre el papel de los bancos públicos de infraestructura. Sin más, le paso la palabra a Gonzalo para que nos haga la primera presentación. Muchas gracias a todos y adelante.
Muchas gracias, Pancho. Ahí está. Bueno, pues como Francisco So first, to give a little bit of context, left, the global financial assets are estimated in around 379 trillion, which looks as there's enough liquidity out there to finance this huge gap. A large part of this 379 trillion comes from commercial banks that keep a dominant role in infrastructure finance. They face regulatory constraints that limit their long-term. However, inside these 300 finance a part of this gap because they have a high quantity of liquidity and long-term liabilities. So here, the problem is that less than 4% of these assets are invested in emerging economies. And out of this 4%, only like just a negligible part is invested in infrastructure. Most of those investments are in government bonds. So the idea is how to mobilize these investors. If we look at the multilateral development banks and DFIs, the lending capacity is quite low compared to the needs. We calculated that it's around 350, 400 billion, taking into account the capacity of the 20 largest development banks in the world. So that's why we decided to undertake this study. So what we did is we have reviewed 19 case studies of successful blended finance interventions that mobilized institutional investors. We also surveyed 12 of the most active institutional investors globally in infrastructure, and we conducted extensive interviews among MDBs and development finance institutions. So in order to frame the success or not of these interventions, we first identified what are the barriers and challenges to mobilize financing from institutional investors, and we have grouped them into 3 categories. The first one is the lack of inventory of financeable projects, mainly due to institutional and budgetary limitations that prevent the preparation of solid projects. The second failure is the failure in government actions. So these are actions that have a negative impact on the expected return of a project. And these actions can have an impact on the confidence that investors have in the government fulfilling its obligations. And it's, for example, a regulatory risk, a breach of contracts, etc. And the third set of barriers are failures in financial markets, and these are basically the absence of adequate financial products for long-term financing, for example, instruments in local currency, foreign exchange risk hedging products, etc. So from the review of case studies, these 19 case studies, the main lessons learned and how they tackle these 3 barriers that we identified are the following. For the inventory of investable projects in lower income countries, whole life cycle approaches have been very successful in countries that have weak institutions and shallow financial markets. A couple of interesting case studies were the Climate Investor one that was implemented by the Dutch Development Bank, FMO, for the energy sector, and also Infra by IFC. In the case of Climate Investor one, it was specialized in energy, and what is interesting is that it had 3 different funds. First, it had a project development fund that was financed by donor capital and development banks. The second fund was an equity fund for the construction of the projects that had 3 different risk levels and had capital from commercial banks, development banks, and also pension funds. And then the third fund that it was a refinancing fund that mobilized senior debt once the project had reached construction and this construction risk was eliminated. In middle-income countries, programmatic approaches and interventions to strengthen the enabling environment have been very successful, and this involves approaches where development banks have working policies, regulations, standardization, and scale. And a good example was what was done in this country, in Colombia, with the 4G toll road program that financed, I think, $16 billion of projects. Of toll road projects, and that it managed, and 25% of those assets were mobilized from institutional investors. As regards the government actions failure, in lower income countries and middle income countries, we can highlight that single or concerted MDBs credit enhancement efforts have been quite successful. A good example has been the Turkey Elastic Hospital, which involved a combination of 5 development banks, IFC, MIGA, EBRD, Proparco, and FMO, that combining the credit enhancement, they could manage to pierce the Turkey International Sovereign Rating and achieve a higher one. In middle-income countries, some domestic DFIs have been very successful backstopping the government risk. This government risk has, for example, the timely payments, expropriation, and those government failures that we mentioned previously. And it's important to highlight that these domestic DFIs have a good corporate governance structure, sometimes with the involvement of the private sector in the government structure, and also with financial autonomy. And some examples are FDN in Colombia, Infraco in Nigeria, and IIGF in Indonesia. Regarding the financial markets failure, there are 3 types of interventions that we would like to highlight. The first one is interventions that transform loans into investable assets, and these type of interventions have achieved the highest leverage. For example, $10 to 1. And here what the approach is to aggregate a critical mass of private and commercial projects, commercial loans. So you pull all these loans, and you can issue a collateralized loan obligation that mobilizes institutional investors. This is more conducive to infrastructure investment because commercial loans are more flexible than the typical bonds or other listed securities that institutional investors use to invest. A couple of good examples are the MCPP program from IFC, where the IFC mobilizes the institutional investors from the beginning of the project. So the IFC establishes a platform, and this platform originates the loans that go to infrastructure. The second one is Bayfront Capital, which created a platform that purchases these loans from commercial banks and then issues these collateralized loan obligations. The second type of intervention is the co-investment initiatives that have managed to mobilize both global and local investors. And here, good case studies are CDPQ in Mexico and also in Colombia, and KEPFIC in Kenya, which are basically consortiums of investors, especially local pension funds that put together their assets and are able to invest in infrastructure projects. And last but not least, domestic guarantee platforms such as Infracredit in Nigeria and Pakistan that have been able to finance projects. At the beginning, they have been full wraps, but the idea is to try to move these guarantee platforms to parallel credit guarantees so that it could be a more a commercial solution. So from the survey to the 12 largest global institutional investors, here you can see some feedback that they gave us. The first one is the need for both sizable and bankable pipeline of opportunities. These investors have preference for big ticket and continued investments rather than just one-off projects. Second one, politicization of infrastructure is common. And this manifests in the prioritization of countries of investments that follow electoral cycle, but that not necessarily make sense from a fiscal capacity point of view and from the public investment management capacity of the country. A third one, poor track record and creditworthiness of off-takers is a significant risk, and here is the perceived risk of governments not honoring the contractual payment or their performance obligations. Fourth, the lack of consistent ESG framework is one of the issues that these investors see, and this is important because this is increasingly important because of the risk of greenwashing that can be perceived if the ESG standards are not the adequate ones. Next, a weak local currency market and lack of long-term currency hedging instruments is a major factor, and this includes the non-availability of suitable intermediate investment vehicles for investors to invest in local currency. I think that this was highlighted by the CEO of DBSA in the previous session. Next one is the lack of stable and transparent regulatory and legal framework as a major deterrent, because this creates a lack of confidence in the governance and the process robustness, the procurement process. And finally, that no two emerging markets are the same, and this alludes to the balance between standardization and country-specific solutions. So, taking into account the global review of case studies and the survey, the report recommended three potential solutions to try to develop. The first one is the global standardized approaches. So it's developing hard currency vehicles that could offer first credit enhancement to investment grade. These are the case of the guarantees, but what the study proposes is to develop commercially viable guarantees that are sustainable in the long term. So this is a bit different from the typical guarantees that the multilateral development banks offer, which have a concessional price and that also has require a guarantee, a counter guarantee from the government. So this business model would be a commercial one with the risk premium that is based on the probability of default and the expected loss. Another global standardized approach is developing these project aggregation vehicles that can provide large scale and standardization, which are more suitable for the operation and maintenance phase of the projects more than for the construction phase, and that has more opportunity to attract capital. The second potential solution to develop are local credit guarantee facilities, and this would be implemented through domestic development credit guarantees, so that the mobilization would be higher. The role of a development finance institution such as the World Bank could be bringing capital to these facilities, and also it could support in the project preparation and enabling environment. And finally, the third solution that we propose is the development of co-investment platforms that would be applicable for selected emerging markets that have local institutional investors. And a good example is the CDPQ in Mexico and Colombia. And here the multilateral development bank could provide a credit enhancement to these structures, maybe investing in the subordinated tranche so that it could be comfort to investors. So the conclusions and the implications for DFI, such as the World Bank, are first that the standardization of vehicles and reaching investment grade has been critical to reach scale, but multiple solutions need to exist because the approaches are very different and depend on whether the country is a low-income country or a medium-income one. The underlying asset, the risk profile, and revenue generation is it's different. It depends. Energy sector, transport sector it's very different from water sector, for example, and also the phase of the project. The solution would be different depending if in the project you have the construction risks, or if the project is in operation and maintenance. So to conclude, what we propose is advancing in two tracks. First, expanding existing multilateral development bank products that have proved to be successful. For example, partial credit and risk guarantees, project preparation facilities, for example, like the Global Infrastructure Fund, and then continue exploring and developing new innovations. And here it would be these three products that I have just commented: global standardized approaches, local guarantee facilities, and co-investment platforms to mobilize local and global investors at the same time. And I'll finish here. Thank you.
Gracias Gonzalo por muy completa presentación. Seguimos con Joan Prats.
Prats from the BID. Go ahead, John. Gracias. Bien, esta presentación es para complementar la presentación de Gonzalo, papel de los bancos públicos de desarrollo en la movilización del capital privado para proyectos de infraestructura. Característicamente, estos bancos han sido más utilizados para desarrollo, en pro de la inclusión financiera, de la consecución de los objetivos de desarrollo sostenible y en los últimos años en infraestructura, que ha sido ahora una prioridad ha pasado a ser una prioridad y que es muy importante. Sí, porque hay que financiar ese déficit, esa brecha que mencionó Gonzalo en su presentación. Entonces, el objetivo de este estudio ha sido evaluar la situación, estudiar los bancos, las carteras de los bancos públicos de desarrollo, ver cómo están financiando la infraestructura. Este estudio se basó en dos productos fundamentales. Uno, una base de datos que fue preparada utilizando IJ Global para compilar transacciones públicas detalladas sobre los financiamientos dirigidos a proyectos de infraestructura en la región latinoamericana y además una encuesta financiera sobre infraestructura que fue diseñada para recoger información de los bancos públicos de desarrollo, de sus objetivos, sobre sus capacidades técnicas y financieras, así como sus limitaciones, sobre sus estrategias de financiamiento y sobre el uso de los productos financieros que están utilizando. Y recoger información, pues todos estos datos, para poder hacer un análisis organizado, institucional, y entender cómo podemos avanzar y cómo podemos cambiar las cosas para que la infraestructura sea mejor financiada en los próximos años. Entonces, los aspectos destacados sobre la base de datos. ¿Qué tenemos? Este es el estudio sigue en marcha, pero voy a destacar que los bancos públicos de desarrollo han tenido una fuente muy importante de financiamiento de proyectos en la región latinoamericana y del Caribe en los últimos años. La banca pública de desarrollo ha aportado hasta el 20% del financiamiento en general requerido y siguiendo el sector privado, que ha dado el 66.5%. Pero lo importante es el poder catalizador que tiene la banca pública de desarrollo. No solamente el 20%, sino es una justificación de poner esto para ayudar y complementar lo que ha hecho el sector privado. Esto es el lado importante del papel que desempeñan los bancos públicos de desarrollo y que deben jugar en la estructura.
Second major characteristic.
La característica fundamental es el papel que desempeñan estos bancos en el financiamiento en divisa local. Entonces, del financiamiento que dan, tenemos que el 81% es en moneda local. Y esto es muy diferente a lo que hace el sector privado, porque allí solamente el 50% en moneda local. Y, por supuesto, son organizaciones bilaterales y multilaterales. Entonces, en general, los bancos públicos de desarrollo dan 2/3 del financiamiento total en moneda local, que en infraestructura constituye una parte importante de la historia.
Matching assets and liabilities of infrastructure projects is a very important part of the story, and this relates to the catalyzing power and the mobilization capacity that national development banks have, because they cover the currency risk that most of investment projects have in our economies, right? And finally, another important thing to highlight is the term structure of the lending from national development banks. The term structure is longer, as is expected. They provide the long-term financing of the infrastructure project. This helps to complement and crowd in private sector and allows for the private sector to mobilize more capital and take some of the risks of the transactions that are more directed to their capabilities, as it can be construction risk, right? And leave the other side of the financing for national development banks. And, well, so this is basic highlights from the database analysis. Unfortunately, we are still undertaking the survey, and the survey is being carried out with 10 major development banks in the region, which together represent 75% of the volume of the overall financing. As mentioned, it's structured in different sections that will allow us to assess the institutional requirements and challenges that public development banks have to expand their role in infrastructure finance, and the survey results will be provided in different in the next few months and in different formats. Final remarks we want to make are the following, right? First is, it is key to understand the scope of public development banks' participation in infrastructure to put into the context of overall public policy. And what this means is that we've been assessing the importance of, I just mentioned the importance of local currency financing, right? And this is obviously more challenging when capital markets are underdeveloped in terms of allowing for local currency financing. And that is not perhaps a work of national development banks by their own, but they need to be in the context of public policy role, especially regulatory development and upstream work from regulatory bodies. And that needs to be complemented within a public policy strategy that helps to strengthen this type of markets in different economies in the region. So that's one thing. The other thing is the importance of the rationale of public intervention. Public capital, it's scarce, and we need to be clear where to focus. And we think that an adequate theory of change should be focused on market failures. And market failures nowadays are clear in several sectors, and we've been dealing with one of them in the previous panel, which is plenary session. I mean, it's externalities and climate change. For example, that cannot be priced in private sector models. Public sectors need to come in and price it accordingly, right? And they are the adequate part of the financial architecture to do it. So this type of market interventions needs to be focused on externalities, information asymmetries, and other market failures that are present in the financial market, right? Final steps we'll have, it's to finalize this study, and two other things. First is to focus on which type of instruments can be developed in the near future for national development banks to be able to do this work of crowding in private capital more efficiently. And Gonzalo was mentioning some of them, guarantee funds. The other two are liquidity facilities. And one is, another one we are developing a model to work on is refinancing options post-construction risk, right? So the Public Development Bank can guarantee long-term financing whenever long-term capital markets are not there. So projects are financially sustainable from the beginning without putting just the financings, but a risk mitigation instrument in place. Secondly, we are thinking about which institutional requirements and solutions are needed for public development banks to undertake these new roles. And here are organizational capacities that need to change, legal departments, financial departments, new contracts need to be developed, human capital changes. There's a big organizational change in that direction. And the other one is to think if new institutional structures can be foreseen that help also in these endeavors, right? And we have the example of FDN, which is one of these potential institutional structures, right? That goes in this direction. So with this, I'm gonna finish my intervention on time, Pancho. So thank you very much.
Gracias, Joan. Gracias, Gonzalo. Gracias, Joan. por las dos presentaciones. Todos sabemos la necesidad que tiene la región de mayor infraestructura y estos dos estudios nos ayudan también, el trabajo del Banco Mundial con los estudios que estamos haciendo en el BID, nos ayudan a entender un poco mejor cuáles son los desafíos. Dicho esto, vamos a pasar al panel. Le voy a presentar cada uno de los panelistas. La idea de esta mesa redonda es formular una estrategia integral de los bancos públicos de desarrollo en la financiación de infraestructura sostenible, profundizar en los mecanismos que permiten a estos bancos públicos movilizar capital privado, los instrumentos financieros, como estábamos hablando recién justo con Gonzalo, que presentó los del Banco Mundial, que pueden utilizar para mejorar esta bancabilidad de los proyectos, como decía Joan también, y los esfuerzos de colaboración que se pueden desbloquear recursos previamente sin explorar. Entonces, vamos a continuar un poco la mesa redonda. Voy a ir presentando cada uno de los panelistas. Gonzalo Martínez, que recién habló, especialista senior del sector financiero del Banco Mundial, con experiencia en apoyar a las autoridades públicas en economías emergentes para desarrollar políticas y proyectos clave para aumentar el financiamiento privado para sectores estratégicos de la economía. Gonzalo tiene una formación diversa que incluye experiencias laborales, tales como auditor de
Then we have Rafael Hurt. We have worked before together. He's the current Vice President of Infrastructure and Energy of Financiera Desarrollo Nacional, FDN, here in Colombia. Rafael is an economist specialized in international finance from North Carolina University. He was the Executive Vice President for Finance and Development for CEF Energies in New York, Vice President of the Colombian Petroleum Association, and CEO of the Grupo de Energía de Bogotá. Thank you. Then we have Clemente del Valle, head of the Center of Sustainable Infrastructure at Los Andes University, with more than 35 years of experience in the financial market of capitals and financing of infrastructure in other sectors. Clemente is an economist with a master's degree from the London School of Economics. He was also the CEO of FDN here in Colombia. For more than 14 years, he worked for the World Bank. Megumi Muto, Megumi. There you are. She's the Vice President of Finance and Development and Associations and Mobilization for JICA, the Japanese International Cooperation Agency. Megumi Mechi, she's the leader of JICA's work in a blended finance transaction together with other development institutions and multilateral banks and private investors. She has a PhD in economics and national development in the Institute for Policy Studies, an MPA from Princeton University, and an executive MBA from Hague, Paris. Thank you. Stephanie Amauco. She's a senior associate of the Accountability Council. In the past, Stephanie worked for public international law and the policy group in Washington, D.C. She has also worked for the Center of Research on Labor, Investment, and Inequality in Sao Paulo, and with the program of the UNDP program in Maldives. Alan Gomez. He's the General Director for Glasgow Financial Alliance for Net Zero. And he's a co-founder of the consortium TCSD in Mexico. Alan has an MBA from Leuphana Universitat. And before this, his current position, Alan worked for the Tecnológico Institute in Monterrey, the Banking Association of Mexico, and Citibank. Daniela, thank you very much for participating. Daniela Cuellar Muller, she's the head of planning and sustainability planning for Banobras in Mexico. Daniela has a degree in law from the Ibero-American University with a master's degree in law from the School of law in Berkeley. She has been manager for different institutions, both private and public, including the Ministry of Finance and the Federal Commission of Electricity of Mexico and the lawyers firm Clydicott, Stud and Hamilton. And at last, we have Marcos Bent. He's the director at Bay Global, a deputy director, the new branch of the EIA. He has a PhD in economics from Institute Max Planck from Hamburg University. Before his current position, he led the Department of Strategy of the Bay Group, and he has had high positions leading operations and the economics department. Okay. Now, I want to thank you all for participating. So let's ask a number of questions now. Let me begin with Gonzalo. Gonzalo, it is believed that additional investment for about $1 trillion yearly to close the gap in global infrastructure. As senior specialist in the World Bank, how do you believe that public development banks can bridge this gap and mobilize private investment in order to close it, to bridge it? Thank you, Francisco.
What public development banks can do, multilateral development banks, is to work Yes, I think in the case of infrastructure, a public development bank, or in the case, for example, the World Bank, we can support with upstream sectorial reforms that are conducive to the creation of assets that can be financed by the private sector. For example, working in reforms linked to the infrastructure assets, such as the PPP framework, standardization of contracts, supporting methodologies to incorporate ESG factors in the structuring of projects, etc. A second area, and this is linked to my presentation, this could help to create this pipeline of bankable projects. Then the second area would be to support reforms in the financial sector. And this could be done through technical assistance and also with tools such as development policy operations that are linked to reforms in the financial sector. These type of reforms could be, for instance, capital market reforms or investor regulation reforms that could help catalyze investments from institutional investors, for example, to infrastructure projects. And finally, using our financial products, in particular supporting blended finance structures, such as the ones that I just described. And the idea here would be to use the capital of the development banks to mobilize the private capital. So the idea is to co-invest with private sector investors. A good way to do this is through the use of pilot projects, where you can work on all these different areas. So you can use this pilot project, work from the beginning in the preparation of the project, do the market sounding with investors, and then if it's necessary, you can also use the balance sheet to crowd in other investors. I think this approach is very useful because it can be a joint learning.
Gracias, Gonzalo. Gracias por...
Thank you, Gonzalo. Thank you for sharing your ideas with us. Rafael, now I'll ask you, as the CEO or president of FDN, or vice president, rather, I don't want to be mistaken here. You're getting me in trouble. Could you share with us how the FDN has been working in order to mobilize this additional investment, and what impact has it had in Colombia's sustainable infrastructure?
Dar un saludo en español para...
will greet you in Spanish. I want to welcome you to Cartagena. Please enjoy Cartagena. And I'll continue now in English because, well, there are people in the panel that do not understand Spanish. So let's go for English.
Mentioned, and I hope to a certain extent respond to both what Gonzalo and Joan mentioned. Gonzalo and Joan mentioned the need for bankable projects on the one hand, for government actions that reduce perceived risk, for financial market development. Those were the three things that Gonzalo mentioned most importantly. And Joan mentioned issues on the knowledge around project financing, local currency financing, and both mentioned guarantee issues. And I'd like to focus on that in terms of what the FDN is doing, and I'd also like to thank you both for mentioning the FDN and the corporate governance structure, which actually dates back to Clemente, who is obviously much older than most of us, and so he was the creator of the FDN in that time. I think 4 issues on how the FDN is today responding to these challenges. Maybe the first one is to incorporate ESG aspects from the outset of projects, and that has a part A and a part B. Part A of that is to make sure that the company has itself a roadmap of sustainability that then translates into how projects are structured and developed. And that happens, for example, in the way that the transport plan that has been issued and updated response. Traditionally, transport plans have been about efficiency and effectiveness. Today, what the transport plan tries to respond is about equity on the one hand and resilience of infrastructure to the other. It tries to incorporate ESG aspects initially. The second aspect has to be with something that Stephanie, I'm sure, is going to get into much more detail, and that is how communities have to be involved from the outset in how projects are structured, developed, conceived, and perceived. Because ultimately, infrastructure is about improving the well-being of the citizens. So if they don't see that from the outset, if they don't perceive that as the right way, projects will not be successful. Maybe in that respect, the third aspect that I'd like to mention is the importance of incorporating the positive impact on the SDGs from the structuring of projects. If you want to make projects that are bankable, that can be actually financed in the financial markets, today it's about making sure that those projects include the positive impact on the SDGs. And in that respect, we're currently doing a study with the financing of the IDB on how to measure, how to quantify the positive impact of the projects on the SDGs from the outset, in a way that actually it's about being able to quantify and not only to conceptually talk about impact on a set of SDGs that have to be defined. They're not going to be all 17, but many of them. Based on that aspect of SDG, I'd like to talk about a couple of things that I think are important in the 2 areas where FDN concentrates. We, on the one hand, structure projects that are going to be bankable, and the second part is obviously financing those projects as local public development banks should do. On the structuring, I think the important thing is how we're working together with some of our multilateral banks. Some of them are our state shareholders, like the IFC, the World Bank Group through the IFC or CAF. And on the other hand, the IDB and CAF are also members of a pre-investment fund. And being able to have funds to actually structure and develop solid, sustainable projects is critically important. I want to emphasize how important it is to have those funds from the outset to be able to structure those projects that will be ultimately bankable. And in terms of bankability, it then leads to A, having concessional funds that will make them ultimately, blended finance and reduce the overall cost of the infrastructure. And B, on the other hand, that they will actually be able to be led to the market with private investors being interested, both on the debt and on the equity side. CDPQ was mentioned several times. Funds like CDPQ will actually assess those projects as to how well they have been structured from the outset. And give you a few examples of that. We're working on the whole transport sector in Colombia, moving from the road to the railway sector. FDN is structuring the projects that are related both to the cargo and the passenger side of the railway sector. and obviously in and of itself trying to incorporate new technologies that will reduce the overall impact on the environment. And in and of itself, the railway sector obviously represents a reduction of that. And then John mentioned the role of public development banks as catalysts, and I think in that respect, FDN has done 3 or 4 things that I'd like to mention just to finish up. One is to finance projects, be it the road sector or others, always together with private banks. So it's about crowding in and not crowding out private financing, and being able to reduce the perceived risk of government actions and market failures that Gonzalo was alluding to. Number 2 is financing a set of new technologies and new projects, mainly obviously electrification of buses in the large cities will obviously in and of itself reduce the environmental impact. And a third aspect is obviously to be able to introduce blended finance funds into a country like Colombia by showing how these projects actually have a positive impact on the SDGs. And that will lead to hopefully a number of projects in new sectors, be it hydrogen, be it, again, electrification of buses, or being in new technologies in the railway sector. So to finalize, I think the role of FDN as an example of a public development bank is to, A, structure projects from the outset that incorporate those aspects of ESG, to have a pipeline of bankable projects that the market perceives as reduced in risks. And number 2, then to, finance those projects, to put the money where the mouth is in terms of making sure that there are funds available for those projects that actually have that possible impact, and mostly to incorporate concessional funding to allow for that blended finance. And ultimately that is, I think, feasible and workable, because I think FDN in that respect has a very positive and solid corporate governance, in which we have, obviously we're owned by the government of Colombia, but the role of multilateral and even commercial banks on our board of directors is critically important. And it's I don't want to make too much, I don't want to say too much about what Clemente did, but that was a very good job, because it allowed obviously the FDN to be an entity with a very solid, strong corporate governance that allows us to move forward. So that's what I wanted to say in answering your question, and again, have a great time here in Cartagena, all of you. Thank you.
Muchas gracias, Rafael.
Thank you, Rafael. Very interesting, your answer. Now, let's move to Clemente. He was the creator of the FDN, so he can give us a different perspective. And now, as director of the Infrastructure Center at Los Andes University, I would like to ask you, Clemente, how do you believe that public development banks can take advantage of the capital markets in order to mobilize this additional investment that is required for sustainable infrastructure projects for the future? Thank you, Francisco. I'll switch to English as well.
Shall comment on the general issues that were presented by the 2 speakers, and maybe add to it, because I mean they did a great job, in the diagnostics and the solutions. So we need to add value here. Maybe one of the things that I believe is key for the role of development banks in supporting this transformation is the role in putting together all of the pieces of the government that you need in order to have a programmatic approach. That's not easy to do, because sometimes, people think that developing a product and coming with a product will guarantee that you will make a major transformation in a sector, and that's not true. You can have 1 or 2 deals, but that's it. But if you really want to transform a sector, you really need to take a programmatic approach. And to take a programmatic approach means that you have to have all the pieces of the puzzle put together in the right time, the right sequence. And I think that is a very important role for the government, and particularly the public development banks are key there, because they have to be the bridge, especially if you want to mobilize private money, they have to be the bridge between the private markets and the government. And sometimes government officials do not understand completely what the private sector really needs. And that's where a good development bank can play a key role. I mean, a good development bank that understands what are the risks, what is the risking that is needed, what are the obstacles. One of the things we did, and I'm proud to say that we were able to mobilize over $10 billion in a very short period of time. I mean, 10 times more than Colombia had ever mobilized to infrastructure in decades, was because there was a very strategic programmatic program, and FDN took every problem of the sources. I mean, what did the capital markets need? What did the international banks need? What did the local banks need? And tried to address each of the problems. And that's where all of these issues that you were highlighting of the obstacles, by having an institution that understands the problem and then tries to bring products and solutions, that can actually have a major impact. And I think there is a good lesson there to that. So that's just to add to the overall role of development banks. Moving to sustainability, and by the way, my center is sustainable finance broadly, not infrastructure only, sustainable finance and climate change. I think we need to be innovative here. Here, innovation is very important because we're trying to bring different things. Look, one of the problems that traditional infrastructure has is its footprint. It has a footprint in two areas that are challenging. One is materials. We have been very conservative on modifying the use of the materials, and circularity still is very low in the infrastructure sector compared to other industries. So there is a need of understanding better how do you introduce circularity. And that means technology, new technologies that you need to do with new materials, managing water, involving nature-based solutions in infrastructure, which has not been used very much, but has to be used. If we really want to make a sustainable world, infrastructure cannot be as disruptive as it has been in many places. I mean, in Colombia, we have terrible cases of roads that have destroyed completely ecosystems by not involving technology in the way they address the issue. So innovation is very important here. And that's where I think development banks have to play a role. And one product that I think could be very useful is the funds. Funds, blended funds, can be a way of addressing technology issues, risks that maybe traditional financial markets cannot address related to the new process, energy transition, even solutions in the agro. I mean, we are now working, I'm advising, thanks to the IDB, a group of development banks in Colombia, on trying to find solutions, for example, to transform the agro. I mean, looking at the whole chain and how do you introduce sustainability through the whole chain from the production to the commercialization in areas as the Amazon. I mean, and you have to be creative in addressing this, and also involving small communities, small SMEs, and that makes the whole recipe much more challenging. But development banks, again, have, I think, the capacity to bring in these different dimensions. You know, SMEs, how do you aggregate through securitizations maybe? How do you bring enabling environment to support these solutions? And how do you support innovation through, for example, maybe impact funds, venture capital funds? I feel that there is plenty of activities, you know, in order to transform, and even involving more the communities. I mean, I think Rafael was mentioning that one of the problems we've had, you know, at least in Colombia, is that we have involved communities very late in the process of project development. So when the project is already too advanced, then you go and do consultations with communities. At that point, they can actually create more problems than solutions because it's too late. You have to involve them at the beginning when you're actually starting to think the project, because it's the only way you can involve both sustainable solutions as well as involving the community in understanding why are you doing this infrastructure. So all of this, again, I think private development banks have that catalytic role. And I think that there's plenty of good instruments, but you need to have capacity, and maybe I'll address that later because I think that's key to achieve all of these solutions.
Gracias, Clemente.
Thank you, Clemente. Thank you for your input. Now, I would like to move to Alan. Alan, as the General Director of the LAC network, of the Financial Alliance, how has this entity collaborated with the public development banks to lighten or to design a net zero emission, channeling investment towards sustainable infrastructure projects.
Gracias por la invitación. Realmente me complace estar acá. En mi caso, voy a pasar a español porque en Latinoamérica tenemos acá una barrera de idioma y yo no estoy acostumbrado a escuchar todas estas conversaciones tan interesantes en español, así que me disculpan. Thank you very much. My name is Salam Gomez. In fact, I am very pleased to be here representing Glasgow Alliance for Net Zero. I am the current director of the network we're going to launch in Latin America. This is a great opportunity. May I explain what is this? This is a global coalition of financial institutions with a focus on climate, with the commitment to net zero. They are aligned through the net zero alliances for net zero. We have bank institutions, we have consultant firms, insurance companies, and the objective is to unify the financial sector to achieve the SDGs. How do we do this? Through the implementation of initiatives on capital mobilization, capacity building, engagement, commitments, net zero, and we also contribute to the alignment of public policy. Today, we have more than 550 organizations globally, and we're talking about more than $300 trillion, which have been in the financial assets. Now, how do we cooperate with multilateral banks and public banks? Actually, we have a number of ways of action, and the main purpose, the key purpose, is to mobilize capital. As Joanne said, interesting is the organization that we have to have in public institutions for development and in multilateral institutions. Not all public institutions today, not all multilateral banks today have a commitment to address net zero as such. There are no objectives on the table, and there are no transition plans already established. And this is where we can help. From G funds, we have already created a methodology. Methodologies based on the private finance sector, but can be applied to development banks. These methodologies are available, they are public. They can be adopted by and adapted by the development banks. And these methodologies will help them to channel in a better way their service to the economy sectors. They will provide for transition routes whereby development banks can increase their impact. No doubt the scale and diversity of investments required for net zero require new approaches to mobilize capital. And no doubt, here we have a big opportunity to cooperate on the country platform, such as the one we have in Indonesia and in Vietnam, the Just Energy Transition Partnerships. These are vehicles to support emerging markets in their ambition towards net zero. These vehicles work with a number of stakeholders from the economy. They identify barriers. They also help to eliminate local problems, to solve local problems that may impact private investment. And sometimes, that reforms are necessary in public policy. So we have been working in this approach with financing in common to promote transition plans, the net zero objectives, and to provide and to offer a way to move together forward in this effort. Thank you. Thank you, Alan. Thanks for your input. Now we continue with Daniela. Daniela will tell us how they have been using finance, blended finance successfully with financial institutions, partnerships to mobilize private investments in a sustainable infrastructure project in Mexico. Gracias. En nombre de nuestro director Jorge Mendoza, quisiéramos agradecerles por la invitación y por permitirnos compartir la experiencia que hemos tenido con Finance in Common. Antes de pasar a hacer la presentación, quiero dar contexto sobre qué somos. Somos el Banco de Desarrollo más grande mexicano. Tenemos 60,000 millones de dólares en activos. También somos el quinto en el sector bancario mexicano y damos financiamiento para infraestructura en todos los sectores. Damos financiamiento y asistencia técnica también para los gobiernos subnacionales. Tenemos una estrategia sostenible en el banco que nos guía en nuestras operaciones cotidianas. Tenemos dos marcos, uno, la política ambiental y social, y el otro, la política de género. Y incluimos los factores de ASG en nuestros proyectos en los que financiamos. Tenemos muchos proyectos basados en perspectiva de género. Bueno, y habiendo dicho eso, quiero pasar ahora al tema. ¿Cómo podemos financiar infraestructura? Voy a hablar de un proyecto específico que es un hito en México. Es el segundo proyecto más grande. Es una planta que se llama La Pimienta. La Pimienta está ubicada en el estado del sureste de México. Y es una planta solar que tiene 1 millón de paneles solares que proporcionan electricidad a unos 300,000 hogares. Además, ha permitido reducir las emisiones en el orden de 1.5 mil millones de unidades. Este proyecto tiene un esquema de financiación muy interesante porque han participado varias instituciones del sector privado y público. El BID, que es una institución multilateral, y como lo dijo Rafael y Clemente, fue muy importante desde el comienzo de planeación del proyecto de esta planta solar que las comunidades participaran en el proyecto desde el inicio, desde su concepción. Se trabajó con las comunidades, de hecho, mujeres trabajaron y han trabajado en la construcción y también en el mantenimiento de los paneles solares. Mujeres de la comunidad, sí. Y yo pienso que este es un buen proyecto ejemplar de que el financiamiento funciona. Además, dimos un financiamiento adicional al proyecto en sí. Trabajamos en asesoría fiscal, tributaria. Eso fue importante para los desarrolladores, para que pudieran llevar a término el proyecto. Les dimos asesoría fiscal. Y el financiamiento combinado ha sido muy importante en este caso, y lo es para proyectos de esta naturaleza, para este sector, sobre todo en los mercados emergentes como el de México. Bien, eso es todo. Muchísimas gracias. Thank you, Daniela. Next, Begumi. Thank you, Begumi. As Vice President of Finance for Development of JICA, he has led sectors to do blended finance in association with other financial institutions for infrastructure projects. How has JICA used finance transactions, blended finance, to mobilize private investment in Japan and in other territories? Thank you very much. But I'm going to continue in English because there are some financial terms that I cannot use in Spanish. Gracias, muchas gracias por la invitación. Es un honor para mí estar en esta discusión. Y quisiera explicar los antecedentes de JICA, que es la Agencia de Cooperación Japonesa Internacional. Somos el producto de una fusión entre la parte JBEC financiera y la Agencia de Desarrollo JICA. Esto ocurrió en el año 2008, esta fusión. Entonces, somos un modelo de negocio bastante único. Nosotros estamos en una agencia de desarrollo que realmente hace mucho por hacer transferencia tecnológica y desarrollo de capacidades. Ese es nuestro modelo de negocios, pues. Bien, pasemos ahora a responder a la pregunta que me acaban de hacer. Como institución, como FDI, nosotros tenemos un esquema financiero como el Banco Interamericano de Desarrollo. La idea es vencer nuestras debilidades originales. Bueno, nuestra operación es muy interesante porque nosotros movilizamos capital privado, 150.000 millones de dólares al año. ¿Y cómo es el cofinanciamiento? ¿Cómo va esto con lo que hace el Banco de Desarrollo? Bueno, esto se llama Fondo de Infraestructura y JICA aporta 1.5 mil millones de dólares y las prioridades son proyectos de infraestructura, joint ventures, proyectos de iniciativa financiera y privatizaciones. Todo eso lo ayudamos. Los sectores energía, agua, transporte, alimentos, salud, ICT. Y trabajamos con una contraparte de JICA que nos ayuda a manejar deuda, y no solamente deuda, sino capital también, financiación. Y juntos hemos logrado reducir las restricciones al financiamiento que han tenido muchos de nuestros clientes. Hemos podido financiar plantas solares en Vietnam y plantas geotérmicas en Indonesia. Hemos pues pasado nuestras fronteras. Y ahora permítame hablarles un poquito de cómo estamos usando nosotros nuestro modelo de negocios único para vencer algunas de las restricciones que se nos han presentado a la hora de financiar infraestructura en Asia. En cuanto a Indonesia, Filipinas, Vietnam, Bangladesh e India, allí se nos conoce como una mano firme a la hora de hacer proyectos masivos, como por ejemplo un metro que transforma la vida de un país. ¿Y cuál ha sido la clave del éxito de esto? Crear demanda primero y no pedir demanda después. ¿Y cómo hacemos eso? Bueno, primero pedimos asistencia técnica, vamos a nuestros expertos, hacemos ejercicio y priorizamos los proyectos públicos y los privados. Y lo importante aquí es que al final de la asistencia técnica queda una lista de proyectos que luego va a ser endosada oficialmente por el gobierno. Y esto entonces crea un entorno bien estable para luego poder trabajar de partida. Y el segundo aspecto, y quizás esto sea algo que podamos hacer cuando las circunstancias son limitadas, y es que cuando hay un espacio fiscal posible, tratamos de hacer financiamiento soberano, sobre todo de los proyectos de infraestructuras clave que han demostrado que van a tener un efecto en la transformación social. Y eso induce a que haya una demanda sostenible. Y esto ha sido el enfoque pragmático que hemos adoptado nosotros en nuestro país. Y en el sentido de que hacemos financiamiento financiero primero, tenemos que crear demanda y luego nos dedicamos a
projects that can be based with that solid demand. For example, private-led urban development along the mass transit line. We have been doing this in Asia, but we are trying the same thinking in Panama mass transit as well, and in this region. Thank you.
Gracias Megumi. Ahora seguimos con Stephanie. Stephanie, como parte del Global...
As part... Now, how can public development banks commit to local communities in order to ensure infrastructure projects, to ensure that they are aligned with their needs and with sustainable development.
Thank you. I was just saying thank you for the invitation, and sorry that my Spanish is not great. So I think the key message that I would share is that as we're discussing how to increase finance for infrastructure, it's also important to discuss how to increase the resources and the commitment to responsible investing and ensuring that the projects are done well. Decades of development experience has shown us that when projects, even with the best intentions, are not implemented according to the best standards and with community involvement, they can actually harm the communities that they're intended to benefit. And my organization, we support communities that have concerns about development projects. And we've actually developed a database of all of the complaints that have been filed to what are called independent accountability mechanisms that are housed at various international financial institutions. And I actually have some information up here. But there have been over 1,800 complaints over 30 years. And infrastructure is the sector with the largest number of complaints. And I think we can learn from the past and take those lessons to move forward and ensure that infrastructure projects are done better going forward. So I appreciate what Rafael and Clemente and Daniela have already raised around involving communities. Looking at the data on infrastructure projects, actually the number one concern that communities have raised is around the lack of consultation. So a lot of times they don't know that the project is coming, they don't know what the impacts are going to be and how those impacts are going to be addressed. I saw her earlier, I don't know if she's here, but I have a colleague, Brenda, from Chile, from the Chaco indigenous group, and I know that she can provide some firsthand stories on how when standards like free, prior, informed consent are not implemented, how that can be devastating to the communities that are meant to benefit from projects. The next highest level of concern is around due diligence, and so concerns that the standards that a lot of institutions have developed around implementing projects have not been fulfilled around environmental, social, and human rights impacts. So going forward, we're calling on PDBs to increase the commitment to ensuring that there is proper consultation, that there's good due diligence, to avoid negative impacts. And lastly, even with the best due diligence, we can see that challenges can still arise with projects. And when that happens, institutions need to have channels where communities can raise concerns about these projects. We know that a lot of PDBs require the clients to have project-level grievance mechanisms, but it's also important for the institutions themselves to have a channel where these concerns can be raised and remedy can be facilitated. And I'm happy to discuss this with any PDB that's here. Love to share more, and I have information up here as well. And there's several other recommendations from civil society and from communities that I think can benefit this conversation, and I just wanted to flag that several CSOs will be issuing a declaration soon on our recommendations for PDBs going forward. So thank you again for the opportunity.
Thank you, Stephanie. Gracias. Marcus.
Thank you, Stephanie. Thank you so much. Marco, another presentation. As a director and a manager of DIB, could you give us an example of how IDB has successfully implemented strategies to mobilize capital?
For me and everybody else in the room, if I don't try to speak Spanish. Well, it's very difficult to speak after all these great interventions already. Just to say that I would like to thank Gonzalo and Juan for the excellent presentation. It's very important for us. EIB Global is the EU's bank, and as such, we are responsible for implementing at least 100 billion of the EU Global Gateway program of 300 billion, which is all about investing in sustainable infrastructure around the world, Latin America, Asia, Africa, so everywhere outside the EU. So this is very important. So now, saying anything new after all these excellent interventions by Gonzalo, Juan, Rafael, Clemente, and Daniela is very difficult for me as a bank. So I will concentrate on, well, because I mean, if you ask about the strategy, I mean, these three elements are very important, right? One, the project design, which is embedded in a programmatic approach. Second, structuring the project in a way that allows us for an efficient risk bundling and allocation, ultimately, and three, making sure that there's governance, accountability, sustainability, and inclusiveness, as Stephanie has just reminded us. So I'm trying to speak, so that was basically what I wanted to answer to your question, but I can say something else, new things. I'm trying to think of things that are part of our strategy that we haven't talked about yet. One is, and that's basically three things. One, can we support as a development bank directly the capital market development, which is very fits that I'm talking about this now because we're going to sign something with IDB tomorrow on the global green bonds initiative, which we work with together with other European companies, development banks like IASID, CDP, EBRD, KfW, and AFD. I think EIB has been the first green bond issuer in 2007, and it was quite a ride trying to create a new asset class. But there were very important lessons learned, and now we're trying with this initiative to try to bring this part of private capital mobilization in support of infrastructure further. So there are two elements of this initiative. One is I think the most important one is the technical assistance one that we're going to sign tomorrow. Is trying to figure out how you transpose all the experience that we now had developing this market into the realities that our partners are facing in other environments. So that's one, and the second element of that is a fund that tries to act then as a anchor investor in such funds to provide the signaling basically. Of course, we must have to be careful not to crowd out what we actually want to crowd in, but it's also important to have an anchor investor to show that we really believe in what we're trying to design. So that's one thing I try to add. Second thing, where we try to add to the strategy of mobilizing private sector investment is trying to mobilize corporate balance sheets of multinationals, where we try to find the right structure to incentivize them to invest in sustainable, into the SDGs, basically, as a corporate. So we have just one example here in the region is actually the work we did with Enel, which we just signed something trying to support investments in wind farms, energy efficiencies, and the likes in their global portfolio. But that's it's just one of the examples, is one of the additional strategy elements I want to bring to the discussion. And the third one is trying to, what the colleague from South Africa said this morning, is trying to address the perceived risk. And as you know, we had back in the days with IFC created this database called GEMS, where we really try to bring all the knowledge that we have. And now it's much bigger. It's all of us in there together, trying to share the data, the risk data that we have, trying to overcome the perception of the perception bias that we still have when it comes to investing in infrastructure and sustainable infrastructure around the world. So these 3 points trying to add, which is very difficult after such a rich discussion so far. Thanks for the question.
Muchas gracias, muchas gracias.
Thank you very much. Thank you very much. We are running out of time. I've been told that we have to come to an end now, but we have some questions here on the table. The idea is to hold a discussion So I'm going to try to conduct a discussion here in the few minutes that we have left. Perhaps we can hear about the challenges that development banks have. Let us try to identify the necessary financial instruments. Questions, relevant financial products, main internal obstacles of development banks to do sustainable infrastructure investment. What is the role of banks? Do these banks truly have institutional capacity strong enough to move forward in these challenges in the region for infrastructure? So these are the questions in general that we have received. No order. You can answer as you wish, if you want. So whoever wants to take the floor, go ahead.
I think that we haven't mentioned it, but you were talking about green bonds was a big invention in 2007. Now we need another one, and I've been thinking that sustainable link bonds has an interesting particularity because it creates an encouragement for, especially in energy transition or transformations on climate change approach, all the efforts that institutions can do to improve sustainability has to be connected, and I think the sustainable link bonds are a very interesting instrument that needs to be promoted. So that's one thing. The other one, which is a reflection of 30 years of being involved with development banks. And when we had to design FDN, we looked at a lot of experiences around the world, what has worked, what hasn't worked. But one key element that was fundamental to the success was the capacity of an institution. And capacity primarily related to the people. How can you get the best people, motivated people, and retain them? Because it's not just to get them, it's retain them in order for them to do all of this. I mean, we have a lot of great ideas that we have been discussing, but if you don't have the right people to do it, or to have the leadership to do it, we won't. And unfortunately, and that's connected with governance, because governments have to understand that they have to give up some of its control if they really want to have very strong institutions that can lead the way for development transformation. And there are two routes to do it. One is obviously through bylaws or laws, changes, that require independent members on the boards, and even if the government is 100% the owner. And I think that works, and I think that has proved to be an important avenue. In the case of FDM, we try one additional element, which was ownership. To give up some of the ownership, which is not easy for a government to give up some of the, but the idea was to bring multilaterals, and we were able to bring the IFC and the CAF. IDB at that point didn't have IDB Invest, so they could not participate. And even a private institution, Sumitomo, which was invited by IFC. But the interesting thing of that was that creates an additional layer of protection, which and more market discipline. But it means political will of a government to be willing to give up its control of an institution in order to create a strong institution. Not easy to achieve, but I think has proved very, very important, because it really helps the alignment with the private sector. It creates more credibility in the institution that understands what it has to do and can help lead the way in these big challenges that we have. So I would like really to highlight that that is very important if we want to get public development banks to play such a key role that they can do, but they need to, governments need to take a decision there.
Thanks, Clemente. Rafa?
I just wanted to say maybe summarize 2 or 3 things that I heard that I think is important. One is, you said, what are the internal obstacles, and it has to do with the multilaterals. I think being able to get standardization and help from multilaterals around the issues of due diligence, previous informed consultation, SDG impact is critically important. I think it's about having personnel that has the capacity to actually assess projects from that perspective. I think the issue that Jaika mentioned about demand creation is critically important. I think it is an issue that we all have to take into account, because sometimes we just believe that we have to solve the issues afterwards, but maybe contemplating them prior is critically important. and then come back to what I think the European Investment Bank is doing about both anchor investment and sort of perceived risk reduction. I think is critically important. It's something that I think public development banks are all about. Is about crowding in private investment both on the bank, on the debt and the equity side, by having that perceived risk reduced, and that is about being an anchor investor, being there and being able to put the money where your mouth is, and that means structuring the projects in a way that they are solid from a community engagement perspective, and then being able to finance them, including the new products and instruments that Clemente was mentioning, and that have to take into account climate investment issues that include all kinds of perspectives from the environmental point of view. Reduced environmental impacts, mitigation of impacts, circular economy aspects that have to be incorporated from day one in the projects that I think PDBs are involved. So we'll be able to answer to the questions and the recommendations that both Gonzalo and Joan put forward at the initial of this conversation.
Thanks, Rafael. Someone else? Gonzalo.
Yeah, so you were mentioning internal barriers within the public development banks. So I think one barrier, and this is a personal point of view, is the incentives of the organization and also inside the organization. So, for example, in the case of a multilateral development bank, the objective is to maximize lending. But if you really want to catalyze, and also Joan touched on this point of catalyzing, mobilizing private investments, then I think there needs to be a switch in incentives. For example, if a multilateral development bank could recycle its assets, sell them in the market, for example, with these pooling vehicles that I was describing earlier, you could have room for more lending. But what are the incentives if you are measured by maximizing your lending portfolio? And then internally, for the project leaders inside the institutions, also your incentive is also to maximize lending, and also don't complicate your life. So for example, if you want to mobilize, for example, through obtaining leverage, the size of your operations would be smaller. But I think mechanisms to reward that should be created inside the development banks. Thank you.
Thanks, Gonzalo. Marcus first.
Well, no, I could actually, because I wanted to say exactly what Gonzalo said. That's, I think we will have to find a way, and I guess the best way to do it is to do it together, to agree on mobilization, or how do we define what our objectives are as a group, and the FIX can actually play a role in this, trying to give us, to jointly come up with a way to structure the incentives such that we don't run into the traps that I also wanted to mention, right? Because it's the two things, right? We get incentives to crowd out rather than to crowd in, because if that maximizes our lending, it makes our lives easier if we ideally finance 100% of the project. And second, if they're good assets, we don't have much of an incentive to let go of these assets because they're providing an income. And so together with the incentives, of course, we will also have to look at how do we finance, or how do we finance ourselves, or how do we, because of course part of the reason why the incentives the way they are is that they generate the income for us to work without any taxpayer money and to continue to provide the public goods. So we will have to find a balance on how to get to a spot where we actually incentivized to mobilize private investments, and at the same time don't become a burden on taxpayers. But, okay, not much to add. Full agreement on this.
Yeah, and I think complementing all the interventions, I think that all the parties have different interests, and that's why it's very important the role of the development banks, because we should be capable of having these kind of projects, and also being the translator or in the middle of how the private sector works, and also we must understand the local communities, local authorities, in order for us to achieve and implement projects that are sustainable over the long run. Thank you.
Thank you. John, last one.
Yeah, thank you. And I think also gathering some of the comments, one was on changing perceptions of risk, then the other was about having a programmatic approach. The other was about aligning our incentives. So we need to find a way to coordinate among ourselves. Part of the thing, I believe, is to understand which risk each layer of our organizations can take better. So MDBs are more related to sovereign risk, probably at the upscale. The national development banks are other risks that they are able to take, and they should be aligned about that. And then we have the private sector as well, regarding project risk, construction risk, and all that. And then public policy also have a role in terms of upstreaming and helping us with all regulations that need to be in place. So all of us to know which part of the value chain of risk we should address, then it's a part that will help us align and create those incentives to avoid also crowding us out, all of us, and build a common pipeline to help on infrastructure, right? So I think that's part of the work that we are doing here today, right? Thank you.
Well, this is it. I think. Thank you very much. I think we achieved the objective of the panel. At least this discussion at the end was great too. So thank you very much. We stick around for the other roundtables, and let's have lunch. Thank you.
Hola, hola.
Hola, hola a todos. Los invito. No, pero no, en inglés. Que los invitamos al almuerzo. Nos toca avisar que hay que ir a almorzar aquí.
Hola. Por favor, if you we can head to the lunch. ¿Dónde está? It is downstairs at the entrance of the convention center. ¿No? ¿Es así?
Sí, gracias. Entra en caos, qué horror.
Chao.